Okay, tenants, landlords, investors. I'm here with Andy Brown, who is the Avocado Lettings Director, also co-host of the Investors Corner podcast.
Yeah.
Going to have a little bit of a chat about what is going on with the rental market. I had a phone call with a friend of mine actually that was talking about the rental market. So it's quite topical. I've just had that call about an hour ago. So just talk to me about supply and demand. That's been the big thing the last kind of 3 years. Is that changed? Is it still 20 odd tenants per let at the moment?
Yeah, it's eased a little bit over the last year or so. Now, if we go back 3 years ago when we were getting sort of 25 inquiries per property, and it was just a crazy time in the rentals market. You know, there was a lot of people out there looking for rented property. The stock had decreased as well. So there was sort of the imbalance between supply and demand, and it was quite high. But that's eased down slightly. Mm-hmm. Now, if I look at statistics for demand, now demand's actually gone down by about 20% over the last 12 months, because I think you've had more and more tenants just get on with their plans in purchasing a property.
What's that 20% based on? Are we talking year on year?
Year on year.
Okay, so there's 20% less demand than there was last year. So it's still very busy because last year was crazy, but it's not as busy by 20%.
Exactly.
That's positive for tenants, I guess.
Positive for tenants because they, like I said, you've got tenants that have just got on with their plans, just making the jump. They're waiting for mortgage rates to come down dramatically. That didn't happen. So they've just made the jump. They've got the funds to finally purchase their property. And we had a lot of sort of people getting that done before the stamp duty changes as well. There's more rental property that has actually come back into the market as well. Looking at sort of over the last 12 months, there's an 11% increase in property. So where you've got less demand, more property coming in, then it seems to have, I wouldn't say balanced itself out, but it's got a lot better. Yeah. So instead of having 25 applicants to a property, we're sort of on average about 12 now.
Okay. That's not too bad, actually.
Not bad.
Do you think it will carry on going in that direction, or do you think that's kind of where it is now?
I think it's where it is now.
Okay.
I think it will remain sort of at that level. If we look back over stats and data over a 5-10 year period, it seems to stay at that level unless something happens drastically with mortgage rates, which I don't think it will, where more people can borrow more money or have got large sums of money to put a deposit down on a house and free up that property. So it becomes even more balanced than what it is currently. Then it may change. But I think, you know, for the next certainly sort of 2-3 years, I think that's the level that we're at.
And typically tenant supply, it is dictated a little bit by buyer demand. It's normally, there's a bulk of tenants, not all, but there's a large percentage of tenants that plan to buy. And when mortgage rates come down or there's a bit of confidence in the market, then a lot of those tenants actually then shift their direction to become first-time buyers potentially. Yeah. We just had a base rate drop this week, and that does seem to have 10-11% increase in confidence with buyer activity increasing each time that happens. So as we go through May and then maybe into kind of June sort of direction, I'd imagine there will be a fair amount of tenants that will be thinking, actually, that's really good news. Let's go find out what mortgage rates are doing. When I caught up with Tom, the Mortgage Tribe director, he did say that there are quite a nice amount of better deals available now, whether it's high loan to value at 90%, you know, kind of mortgage and 10% deposit, or whether it's 50-50, there's some good deals across the board at the moment. And at any level, whether it's a 2-year, 3-year or 5-year fix, there's some much better deals than where they were 6 months ago. So that might pull a few tenants in that direction.
Yeah, I think so. We're looking at, you know, look at some of the mortgage products out there at the moment, and they seem to appeal or are appealing more to the first time buyer market as well. So I think we'll definitely see that. But with the lettings market, it is very seasonal. Once you come into May to September, things tend to kick off again a little bit. Rents increase. There's more activity in the market as well. So we'll certainly see that this year. But yeah, like you said, you know, if there's better mortgage rates out there for especially first-time buyers and renters wanting to get on the property market, then they will make the jump, especially from conversations that I've been having with tenants recently.
If you are a landlord and you're thinking about renting a property out at some point, how much kind of distance in time should you have from when you ideally want it let to when you put it on the market? And then the same question for tenants. But first of all, for landlords, you know, if I've got a property that I'm doing a bit of work to, or, you know, a brother or a parent or a sibling or whatever is, you know, staying in there, a child if you're a little bit older, when do you think you should be thinking about, you know, having a conversation with someone like you and starting the marketing on the portals and stuff?
What I always say to my clients is that always have a 2-month period in your mind. And the reason for that, or you want to do it, or if you can get it on slightly earlier onto the market in 2 months, then that would be great as well. Because what you've got to realise is that there's a lot of applicants out there at the moment that are current renters, where they're looking to upsize or downsize. And the notice period that they have within their contracts is normally 2 months. So you don't want to jump too early, because if you jump too early, then that sort of excludes those people that have got 2 months notice, because they feel that, okay, if the move-in date is the 1st of August, then I can't be out of my property until the end of August. They won't even look at it. So really you're only appealing to people that have potentially got a 1 month notice, or that are new to renting. But a high percentage of the applicants that register have always got that 2 month notice. So ideally, if your deadline is 1st September, then you want to get it on 1st of July, basically. So always 2 months.
And you said a big percentage of them. What is the kind of typical split around the home counties for tenants that are tenants versus tenants that are new tenants, first-time tenants?
So if I look at the applicant registration that we've got at the moment, there's probably around 75% of applicants that are current renters compared to first-time renters.
Okay.
So that's a big portion that you need to try and attract to your rental property. So yeah, timing's critical. That's
interesting, because that actually means there's more first-time buyers as a percentage as a buyer. Normally, at the moment, for the last couple of years, it's been over 30%, approaching sort of 35%. So there's about 35% of buyers that purchase are first-time buyers. About 25% of tenants are first-time tenants. So it's interesting just looking at both markets in parallel to see how those percentages work out. And for investors, it's been tough, right? It's been tough for landlords. They've taken a bit of a battering, haven't they? With obviously the 5% stamp duty now, all the things going on with different tax and legislation. But one thing that we are seeing is that when you look at those big hook rates with the mortgages, the buy-to-let mortgages are the cheaper mortgages at the moment in terms of interest rates, which that's a positive for them. It means that at least the banks are trying to sort of be competitive when shopping around. Do you think we'll see an influx of landlords not necessarily coming back in, because I think the ones that have exited have gone.
Yeah.
But do you think we're going to see a new batch of landlords coming through over the coming years?
Yeah, I think so. I think now it all depends on what's going to happen in regards to, I mean, the renters' rights bill is the biggest thing at the moment.
I'm not going to get you started on that.
Don't get me started on that for hours. But it's going to have either a detrimental effect on everything in regards to sort of landlords that are currently in the market, if they get fed up with it, loss of control, and whether they just want to put their money elsewhere. Or it's going to continue as normal where we are now, because people will realise that actually with property and investing in property, it's always stable. So you've still got, if I look at average yields at the moment, let's just take the Southeast, for example. Well, average yield is sort of around 4.8%. So still stable. Rental prices always going to be stable. If anything, they're going to increase even further. So, and you're always going to have the demand there. So if anything, it's still a great investment to have, because everything's stable. All right, the margins are a little bit smaller than what they were. Okay, there's nothing that we can do about it. We just need to get on with it. So still a great investment. With the renters' rights bill, well, if you've got the great agent in place and they've got their own policies set in stone of what tenants need to do and what the process is to use as a deterrent for tenants to take advantage, then there's going to be no issues there. You can still sell your property. You can still get your property back if you need to move into it. You've still got rights in regards to if they're, they've trashed the property or they've caused antisocial behaviour they haven't looked after it, haven't paid their rent. You've still got that in place. So although it looks bad, really it's okay.
I don't know whether a lot of the landlords that are going to enter the market is sort of aware. It'll be what they've always known, won't it?
Yeah,
which will help as well. But I think you're right in the variety of investing, because people definitely over the last decade have looked at different places to invest, whether it's a whiskey barrel or the stock market, but you are right, property just stays in this nice sort of comfortable line over a long period of time.
What you're getting with property, as in cryptos, stock shares, other avenues, you don't really know what's going to happen.
Mm-hmm.
There's a team behind those investments that you're making, and you're basically putting your trust into that team to do things. The property is yours, and all right, you've got a market there that dictates whether house prices go up, go down, and other things, and other things in place that may determine that. But it's bricks and mortar. Yeah. It's there. You can see it. Yeah. You can feel it.
Yeah.
So,
and it, like you say, there is more confidence when you're seeing base rates decline, and we're seeing mortgage rates reduce, and we're seeing demand for buying, demand for renting going up. It kind of, the metrics, paint the picture, don't they? And you're not really influenced by some crazy older fella over the pond with a bad tan and a toupee that's going to kind of cat bomb all of your investments overnight. So it does seem like a place to put your money. But I always say to most people, try and be a bit diverse with that investment portfolio, but never dismiss property, because it's the safest. It's the safest one of all of them. Great insights, great updates. What is the best rate available at the moment for mortgages? I know the answer to this, because Tom from Mortgage Tribe emailed me. Seems like BM Solutions are the lender of choice at the moment. They've got all the best deals available. I think some of these are exclusive, so you want to have a chat with Tom, but 3.13 is the best buy-to-let deal out there at the moment. You need 50% deposit on that, and I don't know all the T's and C's. You'd have to talk to Tom about it, but they're all 3 point something, very low, depending on whether it's 2-year, 5-year, 50% or 75% loan to value. So,
and we've seen massive changes over the last 12 months, haven't we? It's gone from high down to around 3% now, which is dramatic change. So they obviously want landlords in the market.
It feels like someone's going to do a 2.99 at some point in the next couple of months. So it's a good place to look at it. Have a chat with Andy if you want to know a little bit more about the rental market, or if you're looking to invest in property. Thanks for watching.